15 minutes of chaos that shook the world's biggest markets.
What the heck is going on down here? I don't know. There is fear. This is capitulation, really.
One man shaking the foundations of Wall Street with only his laptop seems pretty impossible, doesn't it? Meet Navinder Singh Saroo, an introverted computer science graduate who made the US stock market lose over $1 trillion in just 36 minutes. But here's something mind-blowing. He did all this while sitting on his cozy bed 4,000 miles away from the United States. Navinder Singh Saroo's story started when his family moved from Punjab in India to London, UK, in search of better opportunities. This migration took place in 1982, and Saroo settled in Hounslow upon arriving in the UK. The location of the family's new home, Hounslow, was chosen for its affordability more than anything else. But little did the residents of this suburb know that it would become the center of attention for both national and international media one day. And that too for a reason would include the mighty Wall Street. Life wasn't easy for Saroo and his parents in the initial years. They worked tirelessly day and night to make ends meet. From multiple shifts to doing jobs that they didn't even know about before moving to Europe, it was a tough life. But this hard work was also a testament to their dedication to their kids and providing a better future for them. Saroo, an introverted kid, grew up watching how his parents had been working for years for him and his siblings. And like any other kid, he always wanted to do something big for his parents as a token of appreciation for everything they had done for him and his siblings. But no one knew at the time that Saroo would become the most wanted man one day, not for theft or murder, but for making the mighty US stock exchange crash and lose billions within minutes. But how did Saroo get introduced to trading in the first place? And how did he become so good at it? To answer these questions, let's have a look at his university life first. The first time Navinder heard about trading and was introduced to the world of numbers was during his university days. Saroo was fascinated by a classmate who was successfully trading tech stocks with his student loan to profit from it, all while sitting in his dorm room. Although it would have been a risky thing for any student at the time, and even today, Saroo's friend kept making money off his student loan, and Navinder kept getting more and more interested in it. Considering the small amount of money students used to get as part of the student loan at the time, just a single bad trade would deprive one of all his savings. But maybe it was written in Saroo's fate to become a trader one day. So neither did his friend make any bad trades, nor did Navinder lose his interest in stock trading. The next step was for him to go deep into the trading world and know everything about it. From the minutest and apparently unimportant aspects to well-kept secrets, Saroo wanted to learn everything, and to his luck, he had the brains to do so too. Navinder was extremely obsessed with the video game FIFA. He used to play so much and had gotten so better at it that he was ranked among the top 200 players worldwide. This FIFA craze and worldwide rankings showed that Saroo, as ordinary as he might appear from the outside, was an intelligent and mentally sharp individual who learned things quickly and became an expert in whatever he put his energies into. Saroo's ability to plan, strategize, and deeply focus on anything was going to play a key role in his stint as a stock trader later in his life. But it would also come with huge consequences, which no one, including Navinder himself, was aware of at the time. So how did the trading career of Navinder Singh Saroo begin? Did he become a successful trader right from the start, or was his journey disrupted by losses? Let's see. Saroo's trading career didn't start as well as he had expected or wanted it to begin. In fact, he had the worst start as a trader and lost his investment when he started dealing in stocks. While for the world, Saroo was an unsuccessful trader, those experiences were building his understanding of the stock markets. And the lesson he learned from the initial losses would help him get better and better with time. Although Saroo had to wait for some time before tasting success, his big break came, and it came in the most unexpected of ways. While reading a newspaper, Navinder stumbled upon an advertisement by a stock trading company that was looking for fresh faces for trading. The ad read, "Wanted, future traders, must work well under pressure." Saroo applied for the job, and though unsure whether he was the right fit for the post or not, he was hired by Futex, a stock trading company very far from the glamour of Wall Street, and this is where Saroo's cognitive skills came into play. Applying his analytical skills and pattern recognition abilities honed through years of gaming, Serow began to improve his trading strategy by addressing the loopholes in his earlier trading tactics. Serow wasn't an ordinary trainee or a new inductee. He had a mind that ran faster than his colleagues. In a couple of years, Navender became a godlike figure for traders at Futex. Everyone wanted to be like him, make successful trades, and earn big bucks. But Serow was different from all of them. He didn't like to chit-chat or go on long coffee breaks. He just minded his business and focused on making profits on his trades. In fact, he was so invested in his work that Serow set up his desk at an isolated location in the office and got himself near defenders to cancel the noise that accompanies a trading floor. His colleagues always wondered, but at the same time were fascinated by how quickly Navender was making money. So how exactly did Serow reach the point where he can make millions of dollars in a single day? And what aspect of trading started bothering him in the meantime? While at Futex, Navender traded E-mini, a financial instrument that tracks the S&P 500, which is the heartbeat of the US stock market and gives an idea about how the stock market is performing on a specific day. By this time, Serow had become an expert in trading. Based on the extensive reading of the market, the orders being placed, and his preternatural ability to determine whether the market was about to go up or down. In the midst of the global financial crisis of 2008, Navender decided to leave Futex. In case you're wondering, by this time, Serow was in his late 20s and had already accumulated about $2 million by trading different stocks. The banking sector bore the brunt of the financial crisis, with several banks crashing and falling like a house of cards. Lehman Brothers was the most prominent example of this. It was a situation of absolute mayhem. The entire global financial system was in danger of collapsing. The financial crisis forced governments around the world and saved financial institutions. Navender's intelligence was helping him to think a step ahead. With so much chaos on the financial landscape, Serow knew that the governments would have to step in sooner or later, and once they did, the stocks would go up. So while the prices were still down, he decided to place a trade using all of the $2 million that he had accumulated while at Futex. The timing of the trade was just perfect. He placed the trade on Friday, just 2 days before the US government made a huge announcement. The federal government announced that it would spend a staggering $700 billion to purchase the troubling assets that were keeping the stock market down. This was big, because within just a week, the prices of stocks in the US soared by up to 19%. Navender rode the whole wave because of his timely investment, and he went from $2 million to $15 million in no time. An interesting fact about Navender was that he didn't spend any of the money he made while trading. None of his family or friends knew about what he was up to and how much profit he was making by trading in the stock, something his parents wouldn't have imagined even in their wildest dreams when they came to England in 1982. The reason for keeping his money a secret from everyone was that Serow didn't want anyone to treat him differently. So rather than spending the money on luxury cars or watches, Navender keeps investing and lets the dollar grow in his profit and loss account. A normal person would imagine Navender would be really happy and excited about the amount he had made, his position as a stock trader, and how successful he had become in such a short period of time. But there was something that was bugging Serow. It was the entry of a new generation of traders in the market known as high-frequency traders. The name suggests that these traders made trades at high speeds, but what enabled them to do so and make profits? The strategy that the high-frequency traders used was called the front-run strategy. Their tactic was to buy stock just before other traders did and quickly sell them and pocket a tiny profit. This was all made possible because of the latest computers and trading softwares that had just made their way into the trading world. The front-run strategy was helping the high-frequency traders increase their bank balance as it enabled them to make a small profit each time. Navender wasn't so frustrated about how much profit the other people were making or how quickly they were making it. Rather, his major concern was that his ability to make money had started getting squashed by computers, which could execute thousands of trades in just a few seconds. He knew that, with enough leverage, the front-run strategy could prove extremely profitable. Keeping the latest market trends in mind, Navender decided to build his own computer algorithm against the HFT firms. But what he was actually planning to do was to essentially manipulate the market. His degree in computer science helped him in this new venture, and after some initial hiccups, his software started working incredibly well. From the comfort of his bedroom, Navender was now able to easily make about $500,000 per day. In the week before the flash crash happened, Navender made about $1.2 million in just 2 days. And then the day came that sent shockwaves through the entire U.S. stock market. May 6, 2010 was one of the extremely volatile days in the history of the U.S. stock market. The fear index that monitors volatility of the market was up 30% on the morning of May 6th, and Navender started using his software to pump sell orders into an already falling and very volatile market. It was a rare moment for Navender, and by the afternoon he was placing orders worth $2 million and earning exorbitant amounts of profit on them. By the time the clock needles hit 1:40 in the Eastern Time Zone, Navender had made $950,000. And just a minute after he turned off his computer, the market started falling at an unprecedented rate. At this point, Navender was just a bystander as the market crashed. One can imagine the extent of this collapse by the fact that $1 trillion were wiped out of the markets in just 5 minutes before they bounced back. The Dow Jones Industrial Average fell by 998.5 points within just 45 minutes, and the ripple effect of such high volatility was also felt by the other stock markets around the world. It was so quick that no one knew exactly what had caused such a sudden and huge dip in the market. Initially, as the regulatory bodies and the U.S. Congress declared inquiries into the incident, there was no clear explanation given for the 600-point drop. The investigators looked into several potential factors, such as a mix of computer-driven trades or perhaps a mistake by the traders. By the start of the weekend, the authorities had ruled out the traders' mistake and concentrated on the trades that were automated on exchanges besides the NYSE. Over the next couple of months, financial market experts analyzed every single event of the day the flash crash had happened. From trades to traders, every single thing was checked to solve what was a mystery at the time. A few months after the flash crash, a very detailed report was published by the U.S. regulators that discussed exactly what had happened on Thursday, May 6, 2010. Not even a single line in the 100-page report talked about market manipulation or a guy in his bedroom in Hounslow having any role in the flash crash. Neither did Navender have any idea about these investigations about the market collapse going on in the U.S. He just kept doing what he had been doing in recent times and kept becoming more and more successful. Since the monitoring of the stock market had become even more strict, the exchange and the regulators started noticing the pattern of canceling lots and lots of orders in Navender's trades. After observing Navender for a few days, the exchange sent him a letter and asked him to explain what he was up to and why he was canceling so many orders. Navender's reply to that letter? To kiss my ass. A response none of the people in the exchange had expected. But it wasn't the regulators who ultimately caught Navender. Rather, it was another day trader like him. The trader working in a small firm in Chicago was testing his own software when he noticed that on the day of the crash, there were huge but weird blocks of orders that were entering and leaving the market just before the flash crash happened. He blew the whistle and gave all the information he had gathered to the CFTC, or the Commodity Futures Trading Commission. The CFTC was mainly a regulator of the agriculture market, and only a few people in the CFTC had the expertise to understand and analyze the developments and events that happened at a granular level. When these experts analyzed Navender's data, it showed he would place orders and then modify them, sometimes even hundreds or thousands of times before canceling them and not getting hit. As the unusual event in the stock market occurred, the leading market indices fell by more than 9%, including a significant drop of about 7% in just over 15 minutes before showing signs of recovery. For a brief moment, $1 trillion in market value vanished. Although stock markets do experience crashes, quick recoveries are rare, but that's exactly what happened on May 6, 2010. The shares of 8 leading companies in the S&P 500 briefly dropped to a penny each before recovering, including Accenture, CenterPoint Energy, and Exelon. With shares of companies like Sotheby's, Apple, and Hewlett-Packard soared to over $100,000, Procter & Gamble saw its value plummet nearly 37%, but quickly rebounded to close to its original levels. Stocks continued to rise in the next few days with the help of a European bailout package aimed at saving the euro. The S&P 500 managed to recover all its losses within a week, but selling soon took over again, and the indices fell to even lower levels within 2 weeks. After going through the orders Navender had placed and canceled, the CFTC became confident that they had identified the manipulation that caused the flash crash on May 6, 2010. And this is when the Department of Justice got involved in this case, because the DOJ could subpoena the potential culprits of the massive scale manipulation. Almost 5 years after the flash crash, in February 2015, warrants were issued for Navender Singh Saroo, and he was arrested. When it came to the bail, the judge set Navender's bail at $7.5 million. Common sense says it would have been fairly easy for guys like Saroo to arrange that amount, but he failed to pay the amount. Not that he didn't have the money, but the different investment firms he had put his profits into refused to give him his money back. And that's when he realized that he was being scammed by the people he had trusted with all his earnings. The next question that needed to be answered was his extradition to the US. Since Saroo was a British citizen, the US government sought to extradite him to face the criminal charges for making the Wall Street crash happen. Although Saroo's lawyers contested that their client hadn't done anything illegal according to the law of the country he was a citizen of, Navender lost the legal battle and was extradited to the United States. Facing 22 charges initially that carried a maximum sentence of 380 years, Navender pleaded guilty to 1 count of electronic fraud and 1 count of spoofing, which is an illegal practice in the United States. But he was different from the usual electronic fraud accused. He was incredibly helpful to the US authorities and gave them important insights into how market abuse goes on. He also helped the Department of Justice build a number of cases against financial criminals involved in different trading malpractices. These reasons and the fact that Saroo had not spent the money on any luxury items made the prosecutors ask for his release upon signing a guilty plea and paying a fine. Another factor that also helped Navender's case was his autism and the time in jail he had already served. In his guilty plea, Navender admitted that between at least January 2009 and April 2014, he used an automated trading program and other spoofing techniques to manipulate the stock market for E-mini Standard & Poor's 500 futures contracts, stock market index futures contracts based on the S&P 500 index through the Chicago Mercantile Exchange. Saroo admitted that thousands of spoof orders were placed from his system that he had no intention of trading, and that he did so to make their supply and demand appear different from what it actually was. Navender said he did so to make other traders trade E-minis, which they would not have traded had it not been for his spoof orders. Saroo admitted that he was able to induce other market participants into buying and selling E-minis in thousands of instances. This was not it. His guilty plea also stated that in situations when the market reaction occurred, Saroo executed real orders and was able to generate significant trading profits from buying and selling his genuine orders as well as the spoof orders. Navender Singh Saroo also paid $12.8 million to the US government. The prosecutor said that this was the amount he had earned by doing illegal trading, which has been termed as spoofing in recent years. Navender was eventually given a year of house arrest by the federal court of Chicago Judge Virginia Kendall. While handing out the sentence, she reportedly said to Saroo, "I hope that this is a lesson to you." Before he was sentenced, he requested the judge to say a few words. "I spent 36 years trying to find happiness on a path built on a lie," he read from a sheet of paper in a quiet voice. "I did the things society says will give you happiness, and when they didn't, I didn't know where to look." Saroo also said that he'd been addicted to trading, but during his time in prison he realized that it didn't have any deeper meaning for him, contrary to what he had initially thought. "Money doesn't buy you happiness, and I'm glad I know that now." After the 2010 flash crash, many academic researches were carried out to study how exactly a stock market crashes and the role of spoofing practices in making the market fall. The researchers proved that the spoofing events around the time of a market crash were not isolated occurrences, rather, they've happened quite often. Reaction towards Saroo's actions has been mixed ever since he was arrested for spoofing. The CFTC investigation concluded that Sarow was at least significantly responsible for the order imbalances in the derivatives market, which affected stock markets and exacerbated the flash crash. Liam Vaughan, an investigative journalist from Bloomberg, wrote the book Flash Crash, which states, depending on whom you ask, Sarow was a scourge, a symptom of a financial system run horribly amok, or a folk hero, an outsider who took on the tyranny of Wall Street and the high-frequency traders. A lot of people in the stock market, especially the day traders who were new to the trading world, idolized Navender for making a fortune from nothing, and found a way to fight back in a system in which only the most well-founded and well-funded firms survive and thrive. Spoofing has become fairly common around the world in recent years, although it is not listed specifically as a crime by most of the countries, which includes the UK too. However, the United States declared it illegal in 2010, and the first successful case that was filed in this category was against an American trader named Michael Kosha in 2013. Kosha was caught spoofing the futures markets and was sentenced to 3 years in prison. Like Navender Singh Sarow, he also designed his own computer software that helped him make an estimated $1.6 million. But it was not just the individuals who've been accused of this practice. More recently, HSBC, UBS, and Deutsche Bank paid a collective $46.6 million to regulators in the United States to settle spoofing claims. The line between legal and illegal market manipulation is quite blurred, and cases like Navender Singh Sarow are proof of that. A trader's job is to exploit mispricing in the markets. After all, that's how they make money. Moreover, algorithmic trading isn't illegal either. It's an increasingly prevalent practice in markets because it lets traders make a large volume of bets, because it allows you to move faster than a human trader ever could. What's needed is the awareness among traders about which lines to cross while trading and which to stay away from. Dubbed as the Hound of Hounslow, Navender Singh Sarow made about $70 million over several years as a stock trader. But right now, he's living the same penniless life as he was living before entering the trading world and shaking the foundations of Wall Street. If you like this highly interesting story of Navender Singh Sarow, then like the video, subscribe to our channel, and hit the like button. See you in the next video.